Hello everyone, welcome to today's lecture. So today what we are going to do is now let's say fiscal audit, bank audit, audit of insurance companies. So we have discussed these topics in previous lecture. However, I feel we require some more practice onto these topics. Practice in the sense we'll discuss some of the past questions, some of the new questions. We'll solve the practical, solve some of the questions, MCQs, and then we will practice these topics and then see how the questions for these topics come into the exam. Also, I will be taking up the doubts this topic related to any other topic that we have discussed in past. So I'll be taking up all those doubts, so you can ask as much as you can. I'll suggest over here and then we'll see. Let me start. So guys, first I will be starting with the questions of tax audit. So we'll discuss some more questions on the tax audits, audit under fiscal laws. So just to quickly revise in the audit under fiscal laws, I'll just show a brief and then we'll start the questions again. So what we discussed in audit under fiscal laws, we discussed about application section 44AB. What is section 44AB? Under which circumstances it is required, audit is required under section 44AB. Format of audit report, form 3CA, 3CB and 3CD. Then we discussed, what is the eligibility of an accountant, means a person who can perform the audit under the tax laws, who are eligible, who are not eligible. We discussed that in detail. Then remember I discussed the form 3CA with you guys. So how a form 3CA is required to be filled when there is a person who is or a assessee is already getting his accounts audited under any other previous act or any previous law, any law other than the tax laws. Then form 3CA will be required. Form 3CB, if he is not required to get his account audited in any other law, and if he is required to get audited only under the tax laws, then form 3CB. Then we discussed form 3CD clause by clause. Remember, each clause we discuss in detail. Form 3CD, like with respect to depreciation, with respect to the amounts not debited credited to profit and loss account, then ICDS, then TDS. There are various clauses that we discussed in the form 3CD. And we solved, and that day also we solved some MCQs, but today we are going to solve some more MCQs. I'm sorry. So let's start. First, Amity Hospital. Amity Hospital Limited appointed MNO and Associates as a tax auditor for the year ending 31st March 2021. The signing partner of MNO and Associate, Mr. K, was a patient registered at Amity Hospital Limited. In January 2020, Mr. K underwent a surgery in the same hospital where the total bill of the surgery was 15 lakh. Amount charged by the hospital was in line with the standards charged with, which are also charged from other patients. For the year ended 31st March 2021, the total tax audit fees quoted was rupees 7,30,000. After completion of the tax audit, the auditor claimed 31,000 as an out-of-pocket expense, which was paid by the hospital. The audit committee of the company, after the audit, identified that the signing partner of the firm has paid 15 lakh to hospital for his surgery in past. As a result, the audit committee claimed that the appointment of the tax auditor was void, as audit fees, including out-of-pocket expense, was more than 50% of the amount paid by the tax auditor as a surgery fee. Also, this 50% criteria establish a business relationship with the signing partner, and as a result, where the individual has a business relationship with assessee, he cannot be appointed as the tax auditor. You, as a signing partner, guide the audit committee regarding the person eligible for appointment as a tax auditor as per section 288 of Income Tax Act. Without going to the options, I'll first want an answer from you guys. What do you think? Whether he's eligible or not to be an appointed as a tax auditor. So without going to options, I'll first will require answer from you guys, and let's discuss the options. But let's see how many of you, without seeing at the options, can answer this question. Come on, guys. Pretty easy. We have already discussed this topic in past. That's why, we are just, this will also enhance your understanding of the topic. It will help you revise the topic also. Come on. I'm waiting for your answer, guys. I'm waiting for your answer. It's pretty easy. I'll compare to say because it's a direct application of a provision that we just now. I also just now mentioned that provision. Okay, just to give you a hint, it's something related to with the definition of accountant. So if you just refer that particular definition, if you just look into the provision, it will be pretty easy. It's a direct application, nothing else. Okay. Let's now go and discuss the options over here. A person who directly or indirectly has a business relationship with the assessee of such nature as may be prescribed cannot be appointed as a tax auditor of such assessee. In the current case, Mr. K underwent a surgery in the said hospital and paid a material amount for the surgery. As a result, this establishes a business relationship with assessee. A person who has business relationship with assessee and charges tax audit fees of an amount which is more than 50% of the amount that was paid by tax auditor in the normal course of business, then that person cannot be appointed as a tax auditor of such assessee. In the current case, Mr. K underwent a surgery in the said hospital and paid rupees 15 lakh for the surgery. Also, tax audit fees was 7,61,000, including out-of-pocket expense, which is more than 50%. As a result, establish a business relationship with assessee. Third option, a person who has a business relationship with assessee and charges tax audit fee of an amount more than 50% of the amount that was paid by tax auditor to assessee in the normal course of business, then that person cannot be appointed as a tax audit. That person cannot be appointed as a tax auditor of assessee. In the current case, Mr. K underwent a surgery, paid 15 lakh for the surgery, audit fee 7,30,000 excluding out of pocket, which is less than 50%. As a result, this does not establish a business relationship. The term business relationship, D option, the term business relationship shall be construed as any transaction entered into for commercial purpose other than commercial transactions which are in ordinary course of business of company at arm's length price, like sale of products or service to auditor as a customer in ordinary course of business by companies engaged in the business of telecommunication, airlines, hospital, hotels, and such similar businesses. Hence, in the current case, transaction was in ordinary course of business and this does not establish business relationship. You tell me which is the correct one. Option A, B, C, D. Now, even after options, I'll say it's pretty easy. You can directly correlate with the option also. Come on, guys. You can now directly correlate with option also. It's pretty easy. Correct, Shiva? Absolutely correct. Come on, guys, I'm waiting for your answer. It's pretty easy. See, you need to apply the concept over here, the provision over here, and it's pretty simple. Okay. Now, what the provision says over here is, this is about the definition of the accountant that we have already discussed. Now, I'll again go to the concept. Okay. Now, what is the definition of accountant that we discussed in the past lecture? Okay. Now, section 288(2) defines accountant. Okay. Who is accountant? Person defined under section 21B of Chartered Accountant Act, who holds certificate of practice, that is fine. But there were certain exceptions which were provided, because of which the person becomes ineligible to be appointed as an accountant. Which are those exceptions? Person engaged, person specified under section 141(3) of Companies Act for assessee who are companies, for assessee other than companies, assessee himself, member of HUF or member of AOP or firm, person specified under section 13(3) in case of trust, a specified person which are there already specified in under section 13 of Income Tax Act, person competent to verify the return under section 139 because he is authorized to verify the return, so he cannot, be a tax auditor. Any relative of the above, officer or employee of officer, partner or in employment of the officer of employee or assessee. Then individual or his relative holding security. Now, if a relative is holding security, then the limit is 1 lakh rupees. Okay. Indebted is indebted to assessee. If he is indebted to assessee, then for relative the limit is 1 lakh rupees. Has given guarantee in relation to any third party. If the guarantee has been given to assessee in relation to any, by any relative, then that guarantee amount should be not greater than 1 lakh rupees. Otherwise, he will be not eligible. Person having business relationship. Now, what was the definition of business relationship? Business relationship means that person having any of the commercial transaction with the assessee. However, the transaction which are in normal ordinary course of business by companies like telecom, hospital, hotels, banks, which are at the arm's length price, will not be considered, that personal will not be considered in this scenario. Okay. Hence, if you see the options over here, option number D, the term business relationship shall be construed as any transaction entered into for commercial purpose other than commercial transaction which are in ordinary course of business of the company at arm's length price, like sale of product or service, by companies engaged in the business of telecommunication, airline, hospital, hotels, and other such similar businesses. Now, reason why I tell you reason, because let's say telecommunication or airline. Now, telecommunication products are being sold in market like SIM cards and all those stuff. Now, if I am an auditor of a company of the telecommunication company, and if I go in the market and buy a product, will that company come to know that I have bought their product? Might not be. Reason because that product is being sold in market directly through retailers and vendors, and company is not directly involved into the sale. Same way for the hotels. If I go and check in a hotel, then company is required to provide me service because I'm checking in that particular hotel. So that's why, and if they are at the normal arm's length price, means the price which is charged to the other customers, if they are not, like charging me a special amount or special price because I'm a tax auditor, then that will not fall under commercial relationship. That does not affect my independence with respect to the audit, and hence that is allowed. So in the current case also, if you see, total bill for surgery was 15 lakh. However, the same was in line with the standard charges with the which are charged from other patients. That is nothing which related to, special treatment to auditor. And this is a hospital, falls under the category. And hence, the correct answer is D. Not C, not B, not A. Understood? Okay. Another good question. Okay. Mr. Y, a non-resident, Mr. Y, a non-resident, carried his trading of clothes in India during the year ended 31st March 2021. During the previous year, 2021, he was in India only for 10 days. Assuming he satisfied all the conditions of being non-resident during the previous year, the following are the details of activity he carried in India during the same previous year. Turnover from wool fabric, 72 lakh. Turnover from cotton fabric, 30 lakh. Turnover from trading of silk fabric, 4 lakh. Denim fabric, 5 lakh. Trade discount given on wool and cotton fabric, 3 lakh. Sale of furniture, 2 lakh. Commission paid, 10 lakh. And bonus paid to sales agent, 20 lakh. This is the particulars of foreign business. Business which is done outside India. Trade from wool fabric, $200,000. Cotton fabric, again $500,000. Trade discount, 70,000. Commission for the purpose of sale, 100,000. And bonus paid to sales agent, 20,000. The exchange rate is 76 rupees per dollar. Now my question, number one, whether provisions of section 44AB are applicable to a non-resident, whether Mr. Y is eligible to carry on tax, whether Mr. Y is required to get his accounts audited under section 44AB. Whether Mr. Y is required to get his account audited under section 44AB or not. Come on guys, pretty easy, nothing difficult. It's just a logic application of the provision. Come on guys. It's just a logic application of the provision. And if you have read the provision, it's pretty easy, nothing difficult. Come on guys. I'm waiting for your answer. See, just refer the provision over here because it's a direct application of the provision. If you read the first two lines of the provision itself, you will come to know whether it is applicable or not. It's that much simple. See, what the provision says over here is, if you read the bare provision even, so the bare provision talks about that every person carrying on business shall, if his total sales, turnover or gross receipts, as the case may be in business, exceeds 1 crore rupee. Now, this is a provision's first line. Now, you tell me whether Mr. Y is required to get his account audited or not. He's a non-resident. Simple. He's a non-resident. Correct, Siva. Correct, Vidura. Yes. So if we read the provision, it says that yes, it is applicable. Reason because the provision words use that every person. So it is applicable. To non-resident. Okay, that is fine. Understood. Now the next question will be what will be the appropriate turnover for the purpose of section 44AB. Now, if I had to identify what is the turnover to verify whether Mr. Y is required to get his account audited or not, so what will be the turnover, guys? What turnover from the India business? I'm talking about as of now Indian business. I should take as a for the purpose of section 44AB. What should be the turnover? Come on, guys. What should be the turnover over here? I'm talking about as of now Indian business. Okay, Chua. Okay. Come on, guys. Simple calculation of turnover. What are the amounts that are required to be included? So I'm asking, out of this given amount, what will be the total turnover that is, I'm required to consider for the purpose of section 44AB. Okay. For the purpose of section 44AB, what I will be doing is, I will be taking a wool fabric turnover 72, plus I will be taking cotton fabric turnover 30, plus I will be taking silk fabric turnover 4, I will be taking denim fabric 5. I will be deducting the trade discount because it's a discount given, and if you see any of the discount, okay, discount allowed in the sales, in the invoice itself, or turnover discount allowed reduces the sale price or your total sale value, and that's why that is not required to be considered. So that is the thing. Then sale of furniture. Now when I say turnover, turnover is directly turnover. The word turnover is directly related to sales in profit and gains from business and profession. Now, when I say sale of furniture, commission paid, and bonus paid, they do not, we do not report them in PGBP. We rather report them either in income from other source, or sale of furniture will go to some portion of go to capital gain. If we have any, capital gain on the sale of furniture, after considering the depreciation at the block system, everything, it will go to the capital gain if there is any excess gain. So these both amount will not be counted in my turnover. Bonus paid, it's an expenditure. It's nothing related to turnover. So it will not be counted. So the amount that is required to be taken are these one for the purpose of turnover, and hence your total turnover will be 108, 1 crore 8 lakh rupees. Clear? Okay. Now second question. What will be the turnover for foreign business? Now you tell me what should be the turnover for foreign business. Yes, trade discount need to be excluded. Reason because trade discount is normally allowed to a customer if the sales is made to him, by him exceeding a particular quantity. Let's say if you are purchasing more than 10,000 quantity, I'll give you a trade discount. This is being dependent on turnover directly as per the trade practice. Okay. And hence it's in the nature that, this discount should be deducted from the figure of sales. Now guys, you tell me whether turnover from foreign business is required to be taken or not. If yes, then what should be the turnover that is required to be taken? Come on guys. Absolutely correct, Vidula. Absolutely correct. Come on, guys. I have already received one amazing answer, exactly the answer that I was looking for. Okay. As I stated in the start, Mr. Y is a non-resident. Okay. Now, Mr. Y is a non-resident. So any income by a non-resident earned outside India will not fall under the provisions of Income Tax Act. So this will not be counted for the purpose of tax audit. This will not be required to be, get audited. So turnover from foreign business nil, as this will not be part of income accrue and arise in India. Simple. Okay. So this will not be counted. I hope I'm clear. Okay, good. Another question. Mrs. MNO and Company Partnership Firm decided to appoint ON and Associate as a tax auditor for the financial year ending on 31st March 2021. The signing partner of ON and Associates, Mr. O, was a relative of Mr. K. Okay, who was a partner as MNO and Company but retired in March 2020. Mr. M, the existing partner, raised an objection that Mr. O, being a relative of the partner, cannot be appointed as a tax auditor. Kindly guide the partners of the firm with respect to the person who are eligible to be appointed as a tax auditor as per section 288 of the Income Tax Act. Now, again, there was a company, MNO, and decided MNO and Company Partnership. They decided ON and Associates to appoint them as a tax auditor. Now, the signing partner of ON and Associate, Mr. O, was a relative of K. Who is K? Partner at Messrs. MNO and Company. So, Mr. O, he is a signing partner. He is a relative of Mr. K. Okay. But he retired in March 2020. Now, you need to discuss whether Mr. K, who was like Mr. K, who retired, partner at Mr. K. Mr. K has retired, so whether there is some sort of relationship, or there is some sort of you can say disqualification of that particular partner from being appointed as a tax auditor of that firm, from being appointed as a tax auditor. Sorry, yeah. So let's see what are the options. Although Mr. K was retired from the firm, still he would be continue as a partner as 3 years and not elapsed since the date of retirement, and hence Mr. O cannot be appointed as a tax auditor. Although Mr. K was retired from the firm, he still would be counted partner as a 5 years, and 5 years has not elapsed since the date of retirement, and hence Mr. O cannot be appointed as a tax auditor. Mr. K was retired from the firm, still he would be counted as a partner, as 7 years has not elapsed since the date of retirement, and hence Mr. O cannot be appointed as a tax auditor. Mr. K was retired from firm, hence he will not be counted as a partner of firm, hence Mr. O can be appointed as a tax auditor of the firm. You tell me, what will be the appropriate answer over here or option over here? Come on, guys. Correct, Vidula? Come on, guys. What will the correct answer over here? See, we just now discussed the definition of of tax auditor. What are the eligibilities? What are the disqualifications? Section 288, same. It will be applicable over here. Come on, guys. It's pretty easy. You need to just apply the concept, and please, it's pretty simple. Okay. Let me then go back to the provision and just quickly we'll discuss the provision. See, here it is written that assessee himself, in case other cases like when it's not a company, then assessee himself, member of HUF, AOP or firm, any person specified under 13 for trust, person competent to verify return, any relative of above. Okay. Relative of above means relative of assessee or a member of HUF or firm. Means if he is a relative of a member of firm or a partner of firm, okay, then he will be not be eligible for being appointed as a tax auditor. Now here there is no provision with related to years, that this many years should have been elapsed from being a partner or something like that. There is no such provision. If he is a relative, then he cannot be appointed. If he is not a relative, means if the relationship does not exist anymore because the person is not a partner anymore, then it is fine for being appointed as a tax auditor. Simple. Now, if it is fine for being appointed as a tax auditor, then option A, B, C are wrong, are incorrect. So the correct option will be option D, that Mr. K was retired from the firm, hence he will not be counted as a partner. Mr. O can be appointed as a tax auditor. Simple. Clear? Okay. We have already done a calculation of turnover quotient. That is fine already. This is on the similar line. I'll just quickly solve this for you guys. So what is the question? Mr. A engaged in the business of sole proprietorship. The following is the information with respect to Mr. A presented to you. Turnover 1.4 CR for the year. Goods returned 40 lakhs, not included in the above. Cash discount 1 lakh rupees. Special rebate 5 lakh rupees. Now kindly advise whether he is required to get the account audited under section 44 AB or not. Now you tell me whether he is required to get audited or not. Just yes or no. I'm not asking to do calculation. Just you see the questions and you provide me whether he is required to get audited or not. Now remember, this information, this turnover is for FY 2021. And this is written for FY 1920 of 40 lakhs. Pretty simple. Again, nothing difficult in this. Come on, guys. Come on, guys. Pretty easy. Nothing difficult over here. See, in the current case, what is the scenario is that the return is of FY 1920. However, nowhere it is mentioned that the previous year return is not required to be counted in the turnover. So the turnover will be 1.4 CR minus 0.4 CR, that is 40 lakh rupees. Okay, return minus your cash discount of 1 lakh rupees, 0.01. And or let's say do one thing. Let's I'll quickly redraft here. Instead of in CRs, I like to in lakhs, so it will be easy. So 140 lakh rupees turnover, return 40 lakh rupees, then cash discount 1 minus special rebate 5. Net 94 lakhs. Below, which is this 94 lakh is less than 100 lakhs or 1 CR for the turnover, and hence not required to get its accounts audited. Tax audit not applicable. Simple. Clear? Correct, Vedula. Yeah. Okay. Next question. Mr. A sold a commercial office which was used for the purpose of business in Mumbai for a consideration of 56 lakh rupees. Mr. Z on 1/6/2021 purchased this was sold on 1/6/2021. Mr. A purchased the property in the year of 2015 for rupees 30 lakhs. The stamp duty value on the date of transfer was 65 lakhs. How would you deal this matter in the tax audit report? Okay. How would you deal this matter in the tax audit report? Simple. Where you will report? In which clause you will report this particular matter? Come on, guys. Pretty simple, pretty easy. Although I am, solving the questions, but the prime focus over here is, the more practice you guys will do, the more you will understand the concept and the more clarity you will gain. Okay. So practice, and solving the questions and reading the topic, it's more important to understand the topic itself. There is no alternative for the reading and practice. Trust me. Short notes, quick reference notes, nothing is important till the time you are thoroughly read the topic, practiced the topic in past. Unless and until you are not done that particular exercise, nothing will come to use. So there is no alternative for reading, self-study. Okay, you need to study yourself. You need to look into the topic. You need to solve the questions. Then only you will be able to understand in detail. Come on, guys. Where you will report the said matter in the tax audit. Let's see the options also. Clause 18D, then clause 18D and 21D, or clause 18D and 17, and this matter is not required to be reported in Form 3CD. These are the options. See, if you have read the form, if you read the Form 3CD, solve these sums, then you should remember this particular thing, which is the correct clause number over here. And this is expected from you, that you should be remembering with clause number a particular clause of Form 3CD. Also, guys, I'll request you, if you have doubts with respect to any of the question over here that we are discussing, any of the topic that we have already discussed in the past, please ask. Please. Reason because the more you will ask, the more you will learn. Come on, I'm waiting for the answer. Where you will report in this particular in Form 3CD. Where you will report this particular in Form 3CD. Okay, let's go to the Form 3CD and look into this. Correct, Vidula? Okay. This is Form 3CD. My options were clause 18D and first option was clause 18D. Let's see. 18D. 18 is respect to the depreciation allowable and any additions or deduction during the year with dates. Okay. So, if that's a property, if this is a property, commercial property, yes, this will be recorded in clause 18D of Form 3CD because it should have been part of my block. I'm selling it out, and hence there should be reporting for in clause 18D. That is fine, but only 18D. That let's see now. 21D and 17. Now, what is 21D? Let's go first to the 17. So, clause 17, where any land or building both is transferred during the previous year for a consideration less than the value adopted or assessable by an authority of a state government, then we are required to provide the detail over here. Transfer of land and building, where the stamp duty value and agreement value is different than the agreement value. And clause 21D, let's see 21D. 21D, disallowance deemed income under section 48.3. 48.3 is something, you can say there are various given under 48.3, which are those ones. So, if it is a deemed income or disallowance under 48.3, then it will come over here. But otherwise, it will not. But this is not a deemed income or disallowance or deemed income. Okay. This is not that one, and hence the appropriate option over here is my C, 18D and 17. This, no, only 18, not correct. Only 18 and 21, not correct. This is required to be reported, that's why this is also not correct. So the correct answer is 18D and 17. 17, where the stamp duty value, when there is a difference between the stamp duty value and the agreement value, and the stamp duty value which is assessed by the authority is higher, that's at that point in time, it will be reported in clause 17. Clear? Any doubt? So, option C is the correct answer. Understood? Any doubts? Okay. Next question. Mr. A pays rent to his sister rupees 25,000 per month for an office taken on rent from her. The said office is used for Mr. A for carrying on his business. During PY 2021, Mr. A paid 3,50,000 in total as a rent to his sister, for which 50,000 pertains to previous period. As in tax auditor, how will report this matter to the form 3CD? Considering Mr. A is covered under 44AB. Let's say Mr. A is covered under section 44AB. How will you report this matter? He pays 20,000 per month rent for an office taken. He has paid 3,50,000 rupees in the previous year 2021, out of which the 50,000 was pertaining to the previous period. Previous period means PY 1920. Now, how will you report this particular matter in form 3CD? These are pretty simple questions, but again, this is a direct application of the provision. There is nothing difficult in this. If you can direct apply the provision, if you can directly correlate, and it will be solved in pretty much in a minute, not more than that even. Come on, guys. Waiting for your answer. Where this will be reported in form 3CD. Where they should be reported. See, just correlate with the section provision and you will be able to answer it. Okay, I'll discuss with the provision. Remember clause 23D that we discussed? Clause 23, not 23D, 23. Clause 23, expenditure in excessive or unreasonable, like particulars or payment made to person specified under 42B, 48(2)B. Now, who are 48(2)B? Persons specified under 48(2)B? Those are the persons. If you see the definition of 48(2)B, it says that, okay, it says that the person referred, where in case of an individual, any relative of individual or that assessee, in case of a company firm, any director, partner, member or relative of such director, partner, member, in any individual who has a substantial interest, for company, firm, association of person or HUF, any person having substantial interest in the business or profession of assessee, or any director, partner, member of such company, firm, person who carries on profession and business, like who is a relative of that particular company and have a transaction. So there is a list provided under section 48(2)B. Okay, if that person is covered under 48(2)B, then any payment made to that person is required to be reported in Form 3CD. Now, in the current case, this is a payment made to his sister by Mr. A. Now, sister will be covered in the definition of relative, and the payment made is rupees 3,50,000. Irrespective, like 50,000 is for previous year, but the clause asks you the payment made. The payment is 3,50,000. That is required to be reported in clause 23 of Form 3CD. Clear? Understood? Any doubt? Any doubt? Let me take up one more question. Okay. ABC Limited issued shares, issued 10,000 shares to Mr. A having face value of rupees 10 at rupees 100. Okay. Company ABC Private Limited, I'll not write limited, I'll say rather private limited over here. Just a minute. Issued 10,000 shares to Mr. A having face value of rupees 10 at rupees 100. Okay. Now, the next thing is that the shares issued by by ABC Private Limited. Okay. The fair market value, of shares issued was rupees 60 per share by as per, I'll say as per assessing officer's assessment. Means assessing officer has assessed the value, fair value per share, which was rupees 60 per share. Fine. Now, if the value per share was 60 and it was issued at rupees 100 to Mr. A, how this transaction will be reported in Form 3CD? Considering you are tax auditor of ABC Private Limited. Now, I am saying you are the tax auditor of ABC Private Limited. Okay. So, these were the shares which were issued to Mr. A. Now, Mr. A, like here the fair market value of the share is rupees 60. You need to decide how this will be reported in Form 3CD and where it will be reported. Come on, guys. where you will report this particular matter in Form 3CD. Pretty simple, straightforward. Correct, Vidula. Absolutely correct. I'll give you options also. A, let's say clause 28. B, clause 70D, and clause 28. C, clause 29. D, this matter is not required to be reported. What is the correct option? I already received the correct answer, but again, I'm still waiting for you guys. What will be the correct option over here? So, face value was 10, share were issued at rupees 100. Now the fair market value is rupees 60. So where it will be reported? Come on, guys. We have a lot more questions to cover. I'm just waiting for your answer. Okay, so section 56, okay, section 56 7B. What section 56 7B says? Okay, section 56 7B says that any amount, okay, where a company being not substantially interested, where the public is not substantially interested, receives any amount, okay, from an issue of shares over and above the fair value, then that will be counted as the income that is there. But there is a relevant clause of reporting in Form 3CD, that is clause 29. So clause 29 says that whether during the previous year assessee received any consideration for issue of shares which exceed the fair market value of shares referred in section 56(2)(b). If yes, then we are required to provide the details of that. So that amount will be reported over here in this particular clause. Whether during the previous year the assessee received any consideration for issue of shares which exceed the fair market value of the shares referred in section 56(2)(b). If yes, then furnish the details. Now this is that assessee received any consideration for issue of shares exceed the fair market value. In our case, if you go in our case, The fair market value is 60. We have received rupees 100, and hence this is exceeding the fair market value, and that's why it will be reported in clause in form 3CD in this particular clause. Clear? Any doubt? So the correct answer over here will be, just a minute. Yeah. Clause 29, not 28, not 17 and D and 28. And again, this is also not a matter, this will be reported. So this is not the correct answer. So clause 29 is the correct answer. So this matter will be reported in clause 29 of form 3CD. I hope I'm clear. Any doubt? No? Okay. Another question. During the year, Mr. A, has taken the loan from Mr. B. During a Mr. A taken the loan from Mr. B, or not loan, I will say will not term this as loan. During the Mr. A entered into certain transactions with Mr. B, okay, which are mentioned below. Okay. So let's say this is a date. This is amount paid or amount received or paid. This is Mr. A's books and amount. Clear? Okay. So let's say 1/4/2020, Mr. A received from Mr. B. This is with respect to Mr. B only. Okay. Rupees 60,000. Then on 31/7/2020, again Mr. A received rupees 1,20,000. Let's say on 31/8/2020, Mr. A again received rupees 2 lakh rupees from Mr. B. On 39/2020, Mr. A paid rupees 4 lakh. Then On 31/10/2020, Mr. A received rupees 20,000. Then on 31/12/2020, Mr. A again paid rupees 1 lakh, and on, let's say, 31st Jan 2021, Mr. A received rupees 1 lakh. These are the transactions which were done during the year with Mr. B. Okay. These are the transactions which were done with Mr. B during the year by Mr. A. This is Mr. A's book with respect to transaction with Mr. B. Okay. Now, notes, additional notes to the question. Let's say total turnover of Mr. A is rupees 10 crore in PY 2021. Okay. You, as an tax auditor, how you will report transactions with Mr. B in Form 3CD, considering Mr. B is not a relative. Mr. B is not a relative. Okay. Now, mode of transaction is through bank transfer. All the transactions are through bank transfer. Now you tell me where you will report. No, Vijay, it is not there. It was just only for the purpose of option. So just to confuse. So here, you tell me where this amount will be reported. Okay. Now question number 1. Where this transaction will be reported in Form 3CD. In which clause? Then I will ask the next series of questions which are there. Where this transaction will be reported in Form 3CD. Come on, guys. Pretty easy, nothing difficult over here. Come on, guys, pretty easy. Where this transaction will be reported in Form 3CD. Come on, I'm waiting for your answer, guys. It's pretty easy, nothing difficult over here. If you just, think about the concept or apply the concept, you will be able to answer it. It will be very easy if you just apply the concept, that's it. Come on, guys. I'm waiting for your answer. Okay. But Vijula, see, there are sub clauses to this particular clause. Okay. Hint. Clause 31 is the answer. But which sub clause I'm talking about over here? Not only clause, you need to report a sub clause also where, like, which clause of 31? 31, correct, fine. But which subclause I'm talking about here, where it will be reported? That is more important. Because otherwise, there are various subclauses in clause 31 that creates an issue, because if you just write clause 31, there are different multiple items included in that clause. Where? So that's why it's always important you mention which clause and subclause, both in form, for the form 3CD. Reason because a clause might contain multiple subclauses, which is again, it will create, like, you might be answering the question correctly, that clause 31, but subclause, that is also important. Come on, guys. See, okay. This particular thing will be reported in clause 31. A and clause 31. A is regarding particulars of each loan and deposit in an amount exceeding the limit accepted. Okay. Specified in section 269 SS, that is taken or accepted during previous year, that is 231A, and 31 sorry, yeah, and 31 DE, which talks about particulars of repayment of loan, 31D, which talks about particulars of repayment of loan, deposit, or any specified advance amount specified in a limit in 269T, or received otherwise by a check or bank draft through electronic clearing. Okay, so that is a particular clause. Also, there is a clause 31C, which talks about the repayment. Okay, so this will be reported in clause 31C. Let me show you. 31A that we saw, okay, loan or deposit more than 20,000 through any means which is accepted, then it will be reported in 31A, and 31C, repayment of loan more than 20,000 through any means. If you have repaid the loan, then in 31C. In our case, we have done both. So you are required to report in 31A and C both. Now, if you see the requirement of that particular clause, it asks you that you need to provide name and address, maximum amount outstanding, whether the repayment was made through check, and in the case of repayment made by check, whether the same was reported by account pay check or not. Okay. Plus amount of repayment. In case of 31A, same things, name and address, amount of loan, deposit or accepted, whether loan or deposit was squared, maximum amount, whether loan or deposit was taken or accepted by check, or in case of loan or deposit accepted by check, whether it was by an account pay check or not. So now the second question that I am asking over here is, what is the amount of loan accepted for clause 31A and repaid for clause 31C of form 3CD. You tell me what will be the amount of loan accepted for clause 31A and loan repaid for clause 31B. See, this is the transaction which are given. You just need to provide, calculate, okay, what is the amount accepted and amount repaid. A and C is the correct subclause. Now, amount accepted and amount repaid. You need to calculate. Come on, guys. I'm waiting for your answer. Come on, guys, I'm waiting for your answer. Okay. Okay, let me recalculate them for you. See, here we will write accepted and here we will write repaid. 1/4 on 2020, 1/4/2020, 60,000 was received. So this is accepted. This is loan accepted. 31/7, 120 accepted, agreed. 31/8, 2020 received 2 lakh, accepted, agreed. How much total accepted? 320, 380, Till now 380 accepted, fine, no issues. Okay, then repaid 4 lakh rupees on 39. See, when it is about accepting the loan, you can repay the loan the amount you have already accepted. If you see the clause over here, what it talks about, particulars of each loan or deposit accepted or taken during the previous year. Okay. Now, if any amount which I am paying more than which I have accepted is not a loan, it's something I have not taken a loan, but I am paying of the loan to someone else. So a repayment can happen only to the extent which I have accepted. So here the repayment will be 380, not 4 lakh rupees. Remember that. Reason, because out of this 4 lakh, 20,000 is an amount which I never took a loan. This amount is I never took as a loan. Out of this 4 lakh. So repayment will only be 3,80,000. Again, I received 20,000. Now this 20,000 is received in front of that, which I have given the loan and I have received it back. So again, this is not a loan taken or accepted. So this will also not be counted. Now I paid 1 lakh rupees. I have given the loan. Again, this will not be counted, because for clause 31A or C, there is something amount which I have taken as a loan or accepted as a loan and repaid, which I have taken as a loan in past. So it's a repayment. But this is a payment of a loan, means I'm giving a loan. Loans in advance given, not taken. This will not be counted. And again, this is received. This is received. This amount is received against this loan given. So this will not be counted. So these three will not be counted, and 20,000 from this particular thing will not be counted. So accepted 3,80,000, repaid 3,80,000. That's it. I hope I'm clear. Pretty much tricky question for the calculation part, I agree. But this is how it is calculated and this is how it is reported in Form 3CD in practical life also. 31A and 31C in practical life also. Clear? Any doubts? Are you getting my point, guys, or not? Is it clear? Reason, because it's a practical application of a clause, how it is applied in the practical life also. Okay, it gives you the clarity and it will explain you the topic, or will give you provide understanding of a topic. It's very important. Okay. Let's do one thing. Let's take a break, quick 10-minute break, and then we'll start the MCQ for some other topic. Okay. Let's take a quick 10-minute break. Nisarji, can you break the session for 10 minutes? Hello everyone, welcome back. Now let's start the questions for the bank audit. But before going to next topic, as you know that this is a session specifically conducted for the practical questions. Reason because some of the students or there was some additional feedback that we received that you require some more practical questions on the topic of tax audit, bank audit, audit of insurance company, and that's why we are conducting this special session for you guys. So I'll request, take the benefit of this special session that is on your demand. Please ask as many questions as you can and please participate as much as you can. Okay, because this is one of the special session we are conducting over here for just to cover the practicals. Other than the normal sessions, we discuss the topic, we solve the questions. Over and above that, we are conducting this practical session. So please take the advantage of this session. Okay. And also do provide your feedback like you provided the feedback that you need a special session for this particular, question solving for practical problems to build a confidence on these topics. So like this way, provide other feedbacks also. We are here to listen. We will provide you those things and we'll try to, provide as much as possible. Okay, guys. So please provide your feedback and please take benefit of this special session which has been conducted as per your requirements. Okay. So let's start with the next topic, MCQ for the next topic, which is bank audit. See, in the previous lecture, if I say for the bank audit or audits of banking companies, we discussed a lot of things. We discussed regarding just quick revision, regulatory framework, types of bank audit, how to conduct an audit, special considerations for an IT environment, then segregation of internal controls, then audit of certain areas like compliance with CRR, SLR, cash in bank, balances. Then there was a loans and advances substantive procedure. Okay, then we had a credit card operations. Post that, we discussed about the audit report, the format of the audit report, some specific requirements, LFAR, concurrent audit. We discussed about all those things. Now we'll cover these areas into the form of question. I'll cover this particular topic with the form of questions. Okay. So, question number 1. There was a branch of ABC Bank were having 3 staff, 1 cashier, 1 officer and a manager. Cashier was responsible for signing of cash slips, passing entry for cash withdrawal, and for providing cash to customers. Okay. You as a branch or bank auditor of the branch verified the cash withdrawal transaction and passed the control over cash processes. As there were no observations identified, okay. Also, as per the process present in bank or in branch, work of cashier is not monitored on a daily basis. However, on quarterly basis, certain test checks are done by officer of branch. Okay. You like you pass the control over the cash process. Okay, that is there. Now, audit committee of bank has asked you or inquired for the reason why the said control means control over the cash process. Controls over cash process should be reported as operating. Okay. Now, what is the question over here is, a branch of ABC Bank were having 3 staff, 1 cashier, 1 officer, 1 manager. Cashier was responsible for signing of cash slips, passing entry for cash withdrawal and providing cash to the customers. Okay. As a process present in branch, work of cashier is not monitored on daily basis. However, on quarterly basis, certain test checks are done by officer of branch. You as a branch audit, bank auditor of branch, verified the cash withdrawal transactions and passed the control over the cash process. As there were no observations identified. Now you tell me, now as an audit committee of bank has asked you for the reason why the process should be, why the controls over the process should be reported as a operating. So what are your options? Okay, the controls over cash process should be reported as operating because no issues were identified. Okay, during test check means no issues were identified when the test check was performed. Testing of control. Second option, these are options. Okay, the control should reported pass. I will copy this. Control should be reported pass over cash process as test checks are being performed on a quarterly basis by officer. Performed by officer on quarterly basis. Then option C. Now this control should be reported as fail. Should be reported as fail because of the segregation of duty not present. D. This control should be reported as fail as fail or non-operating, both are same, as manager of branch should have at least 2 officers for test check of cash process. Okay. So these are the options. Now you need to select what is the, whether the control should be reported as a pass or fail. Simple. Now what was the question? One cashier, one officer, one manager. Cashier performs a withdrawal, signs a slip and passes the entry. Bank doesn't have that much staff, so what they do is on a quarterly basis they perform some test check. You as an auditor perform the testing of the control and you reported the control as an operating, and you find okay, the design was effective and the operating effectiveness of the controls are appropriate. Now audit committee is asking you why this control should be reported as an operating and pass. So you have 4 options. 1, because you did not identify any issues, that's why. Number 2, because on quarterly basis the officer performs a test check. Number 3, you should not report as a pass because there is a segregation of duty issue. Number 4, you should not report as a pass because there should be at least 2 officers for the test check. What is the correct answer over here, guys? Come on. What should be the correct answer? Come on, guys. Come on. I'm waiting for your answer. What should be the correct option over here? Correct, Vidula? Come on, come on. I'm waiting for your answer, guys. It's pretty easy. You just need to apply the logic over here and that's it. Once you'll apply the logic, it will be pretty easy to understand the concept. So we are here talking about regarding the internal controls of the bank that should be present over the cash process. Okay. Remember in the previous lecture also we have discussed this type of question, like what should be the controls present over the cash process for a bank. So this is from one of that particular case itself. Okay, what should be the control that should be present? And let's now discuss. See, what happens that for a particular for a particular process, there should be some controls that should be present that should provide you that different person should be performing different type of activities. There should be monitoring available. Now, for example, let's say if in a normal company, if the person who is processing the payments is also responsible for recording the invoices, or if a person who is responsible for receiving the goods is also receiving for responsible for posting the invoices, then there are chances that the appropriate segregation of duty is not present. Means that there are chances that the work performed by a person is not reviewed by another person. In that case, what will happen is, if there is no segregation of duty available, then there are chances that things might not be reported appropriately. There are chances of fraud. As a result, it is necessary for a control environment to operate where there should be appropriate segregation of duty. Okay. For each control environment, it is necessary that there should be appropriate segregation of duty available. As a result, in the current case also, if the work performed by cashier, okay, if the cashier is performing the work over here, and if that work is not reviewed by any other person, means cashier alone is performing all the work related to the cash, like passing the entry, signing the vouchers, and all those stuff. If cashier is alone, alone performing that work, then it is said that there is no segregation of duty present in the current case. Means a work performed by a person should be reviewed by another person on a regular basis. Okay. Although as an auditor, you have tested the particular area, that doesn't mean that controls are effective. Okay. What should be the scenario is, even though you have not identified any observation, the control design is not appropriate. The control is not appropriate as it should be, because there is no segregation of duty present. Hence, in the current case, option A is not correct. Reason because although you have not identified any issue, but there is a issue with design of control. So this is not correct. B, again, the test check on quarterly basis, not correct. It should be reviewed on a periodic basis or on a daily basis. That a work performed by a particular cashier should be reviewed by at least responsible officer. Okay, so like it is like usually there is a control that the counterfoil of cash receipt should be signed by an officer in cash department in addition to the cash receiver. There should be two persons who should be verifying the cash slip. Here it is not there. Here it is not the case, and hence this will also not correct. So the correct answer over here is C. Segregation of duty is not present, and hence the control is not operating and design is not effective of the control. Again, B, not correct. Reason because it doesn't matter whether you have a 2 officers or 3 officers. It should be a complete check that a person work performed by one person should be completely reviewed by another person, not on the test check basis. I hope it is clear. That's why the correct option will be C. Any doubt, guys, with respect to this? Okay. Next question. Your firm has just a minute. So, any doubt with respect to this? No? Okay. Your firm has been appointed statutory auditor by a nationalized bank for year 17-18. You are advised to check all the standard assets shown in the balance sheet on 31st March 2018. While verification, you observed that one of the account was regularized on 28 March 2018, for which interest and installment amount was overdue from the quarter ending 30th September 2017. The account was regularized after payment of overdue interest and installment and was done on 26th of March. Okay. So the payments were made on 26th of March and the account was regularized on 28th of March. On the last day of the financial year was recognized as a date of the account becoming NPA by the bank. As a statutory auditor, will you agree with the bank's policy? Okay. Means like here what is the scenario is the account was NPA for a long time. However, on the 26th March 2018, amount was paid and repayment was done and the account was regularized on 28th of March after 2 days of paying the amount. Now you as an auditor are required whether you are satisfied with the policy of the bank or not. Simple. What is the policy with respect to the regularization of the account? So what should be the appropriate policy? Okay. See, generally this question is related to regularization of the NPA accounts. Okay. Now we also have discussed in the past lecture with respect to this topic how and when an account can be regularized. What are the conditions for that? Okay, and what should be the appropriate controls over the regularization of the accounts, or even what additional you can say audit procedures auditor can perform. So let's see the option. As an interest charge in the account was overdue for more than 90 days from the end of quarter, it should be classified as the NPA and should be considered as substandard asset for the balance sheet on 31st March 2018. That should be considered as a substandard. As the overdue interest and installment amount was paid before the balance sheet date, there is no reason to classify the account as NPA. The auditor should not agree with the bank's policy to regularize the account before balance sheet date, as overdue interest indicates more than the normal risk attached to the business. 4. Bank can regularize the account before balance sheet date, but should ensure that the amount has been paid through genuine resources and not by sanctioning of additional facilities, and account remain in order subsequently. So what should be the correct answer? Whether you will agree with the bank's policy or not? Come on guys, pretty easy. Come on guys, I'm waiting for your answer. If you apply the concept here, it will be very easy for you to understand, okay, what is the logic behind we are talking about and what should be the appropriate procedure over here with respect to the regularization of accounts. Okay. Now, regularization of the account should only be done when, you receive the amount and you think there is no further risk is attached. Okay. Now, in the current case, you need to analyze whether, okay, the regularization which is done is appropriate or not. So for that, what you need to understand is, you need to understand first of all the amount or the way the account is regularized is appropriate. So you see on the condition that, okay, when the amount was paid and what was the condition of overdue or for declaring that account you can say as an overdue from quarter 30th September 2017. Then only you will be able to correlate both. Come on guys, pretty easy. You just need to select on the basis of the discussion right now what we discussed, what will be the correct option over here. Correct, Kumar Mangalam. Absolutely correct. Okay, so here, if the account, okay, if the payment has been received, and if we can say that, okay, the payment has been received, by you can say genuine sources, the account then can be regularized. Okay, as per the provisions, if the payment which has been received for the overdue amount, okay, is from the genuine source, not from any other funding or additional facilities obtained to just regularize the account, then yes, we can regularize the account on the balance sheet date. Even we need to see that post balance sheet date there should not be any overdue of the amount. Okay, so regularizing the bank that particular account is appropriate. Okay, and it is not required to be shown as an NPA. So as in the current case, A will not be the correct answer, as it is talking about showing as an NPA. That is not correct. Overdue installment and interest amount was paid before the balance sheet date. There is no reason to classify the account NPA. But again, there are conditions attached. So this is not the correct answer. The auditor should not agree with the bank policy to regularize. That is not correct. There are conditions attached, but we can regularize. So again, this is not the correct answer. The correct answer is D, that is bank can regularize, but there should be genuine resources from which the payment has been made. Okay, and not by sanctioning of additional facilities. Then only you can regularize the account. The correct answer is D. Any doubt? Any doubt, guys? Generally, it is, you need to think about the provision that is there, and then on the basis of that, you need to apply the appropriate procedures, and on the basis of that, you need to select, okay, what is the correct option, considering the environment over here. I hope it is clear. Okay. Now, let me discuss another question. This particular question even was, asked with in one of the exam. Okay, the question was with respect to bank sold certain of its non-performing assets during the period. Now you as an auditor need to provide a program for or procedure to decide what are the steps or what are the audit procedures you will be conducting to verify the sale of non-performing assets. So I'll write it over here. Let's say you are appointed as an central statutory auditor of a bank. Okay, during the year a bank sold some of its non-performing assets. You need to devise an appropriate audit plan to check and verify the sale of NPA. Now that was asked in May 2018. Okay, this was a question. Now This is the descriptive one, so I will be directly discussing the answer over here. Okay. Now, first of all, if you have to verify the non-performing asset, you need to go with the logic. Okay. What is the logic we are discussing over here is, once when you are selling a non-performing asset, what you need to verify, first of all, first is authorization. Whether the bank is authorized to sell NPA. Now, how will you verify the authorization? Whether the bank, this is a question. You ask the question, then you find out the answer of the question. That is your audit procedure. Okay, authorization. Whether the bank is authorized to sell the NPA, and how will you identify with respect to this? Okay, so authorization comes from delegation of authority, policy of bank, procedures, or RBI guidelines. Okay, so this authority comes from this particular thing. Banks, for a bank, the authority comes from either from delegation of authority, policy drafted by bank, procedures, or RBI guidelines. Okay, so once you need, in order to verify the authorization, what you will do is the audit procedure will be that you need to verify the delegation of authority, policy, okay, procedures, either drafted by bank or approved by bank, and you need to verify RBI guidelines with respect to sale. Okay, that is one. Number two, if there is a sale, what you will do is, what you will check? Existence. Now, existence means whether actually they were NPA. Now, for that, what you will do is you will verify that NPA were in books at least for 2 years. Okay, or the period from standard, substandard, doubtful, and all those things have been passed. So at least they should be at least in the books for 2 years, and amount must have been overdue. Then only they actually were NPA and you have sold it. Okay. Third, what you will verify? You will verify, okay, like how much of you realized from that particular NPA sale. Just a minute. How much of you verified from that particular sale? Just give me a minute. I think there is some technical glitch over here. Yeah. Amount received. Okay. So how much it was, realized? How much amount was realized? From sale. And how will you verify this question? Simple. By looking at the documents, agreements, and amount received. Okay. Then you need to see that, okay, post that whether NPA has been removed from the books. Okay. Removed from books. For that, check the closing balance. Then you need to see whether the NPA, which is, sold, that particular NPA which as bank has sold, okay, is sold appropriately, means not, at the loss. So it should be either at sold at the, net book value or a value higher than that. There should not be, what you can say that, there should not be any loss to the bank while selling the NPA, or at least if there is a loss is there, okay, it is appropriately charged to the profit and loss account. Means it should not happen that, okay, the NPA was there, the amount that I could have recovered from NPA, let's say rupees 100 rupees I could have recovered, I have only sold for 10 rupees. So the amount should be appropriate for the, selling of NPA. And if any loss is there, appropriate loss I'm talking about, not excessively, but you need to verify the amount also. So if any loss is there, then that should be booked in P&L account. Okay, so these are the areas that you need to verify for the sale of NPA, and this is how you can derive audit procedure for that. I hope I'm clear. Any doubt? Any doubt, guys? Okay. Any doubt, guys? Any doubt? Okay, no? Then let me move forward to the next question. Okay. In the course of audit of ABC Bank, you identified that an account is, okay, overdue for more than 18 months. Okay, more than 18 months. However, bank still not classified the said account as NPA because there was a central government guarantee available, okay, against the account. Fine. Now, as a part of your audit, okay, as a part of your audit, you need to answer whether this is correct or not. Considering the bank has not yet invoked the central government guarantee. Whether you agree with the bank or not. Okay, so bank, there was an account which was overdue for more than 18 months. However, bank has still not classified the state account as an NPA because there was a central government guarantee available against the account. The bank has not yet invoked the central government guarantee. Now you tell me whether the classification by bank or not classifying the account as an NPA by bank is appropriate or not. Come on, guys. See, here it is regarding the NPA norms. Okay. If you have read it through the NPA norms, it will be very easy for you to answer this particular question. And that's why it's necessary that you read the topic, and then only you will be able to appropriately answer pretty much easy. For a particular bank, NPAs, auditing the NPA area is very critical because that's the main important area for any of the banks. Okay, so you need to understand and you need to think about whether this is appropriate or not. Come on, guys. Pretty much easy, nothing difficult over here. I'm waiting for your answer. Okay, so as per the RBI norms, an account which is overdue, okay, having appropriate central government guarantee, okay, can only be recognized as NPA when the central government guarantee is declined or not adhered to, or is the appropriate word is repudiated. Okay, they did when invoked. Means we asked central government to honor the guarantee, but central government denied on certain grounds that they cannot honor the guarantee reason because of XYZ reasons, and that guarantee was repudiated when it was invoked. Okay, so at that time only the account can be recognized as an NPA, otherwise it cannot be. And hence, in the current case, the bank has not yet invoked the central government guarantee. So there is no question of reputations. And if there is no question of repetition, then there is no question of classifying the account as a NPA. So the classification, not the classification of not treating the account as NPA is correct. So not to be classified as an NPA. Okay, the account should not be as classified as NPA. Now, changing the question, I'm adding one line over here in the question. Let's say another same on the above scenario. The bank has charged interest for the period overdue to the account. Okay, the bank has charged interest for the period overdue to the account and has recognized interest income. When inquired, the bank was of the opinion that the central government guarantee is present and hence income can be recognized on overdue amounts where the guarantee is there. On overdue accounts where the central government guarantee is present. Now you need to verify whether this is appropriate or not. Whether bank can recognize interest on the account which was overdue although they have a bank guarantee. Pretty simple. Again, if you have read the particular topic, if you have read the particular provision, I don't think so it will be difficult for you to answer this question. See, the underlying thing over here is the provision that we are discussing. When a bank is required to recognize a revenue, that's it. When a bank is required to recognize the revenue, that's it. It's a main concept I'm talking about over here. If you're clear with that concept, then I don't think so this will be an issue for you. Come on guys, pretty much easy. Come on guys, pretty much easy. It's there. We have already discussed this also before, but again, understand the logic over here is, see, and as per the norms, okay, NPA norms are different than the revenue recognition. NPA norm says that if you have a central government guarantee, then you are not required to classify the account as an NPA. But income recognition norm says that when there is an account, okay, on which the amount is overdue, okay, for more than 90 days, and there are chances that you might not recover the amount. So the income recognition the guidelines for the bank, it says that till the time you are not realized, the interest on the overdue accounts, you cannot recognize your revenue. So here, interest which is not realized should not be recorded as a revenue. Which is not realized should not be recorded as revenue, even though central government guarantee is there. Simple. Even though central government guarantee is present, that should not be recognized as a revenue. Reason, because the revenue recognition standards are different compared to the NPA classification standards, and revenue recognition guidelines for the RBI goes like, for an account where there is an overdue and if the amount has been not be realized, then it should not be recognized as a revenue. So bank is incorrect in the current case. Clear? I'm specifically, discussing those portions where there is a specific provision for the bank. Okay, and these are the specific provisions which are, in general view, in a general terms, are applicable in practical life also. Okay, another question. During the audit of DEF Bank, you as an central statutory auditor identified that for a certain account, okay, the limits were last verified on, let's say, 1/6/2020. Since then, the limit sanction or the ad hoc limits sanctioned were not verified till the year end, that is 31/3/2020 or 2021. Okay. Now, bank has classified the said account as an performing asset. You need to guide bank whether this classification of performing asset is correct or not. Okay. You need to guide and you need to provide whether this classification is correct or not. That is now this 1/6/2020 is a date of sanction also. Date of sanction, that is 1/6/2020 of that particular limit. Come on, guys. Pretty much easy, nothing difficult over here. It's a pretty much easy based on again provision based question which can come into exam. Now the thing is again underlying provision that is discussed over here. So if you are aware with the provision, I think then it will be pretty much easy to answer this particular thing. If I have to give you options, okay, let me give you options also. Okay. If I have to give you options, let's say these are the options. Accounts where regular ad hoc limits are not reviewed within 180 days from the date of due date or date of ad hoc sanction, the account should be considered as a NPA. In next option number B, where the account of regular ad hoc limits are not reviewed within 90 days, then the account should be considered as a NPA. In third option C, the limit is 365 days. And the fourth option, that account should not be considered as an NPA. What is the correct option? A, B, C, D. I think now it's pretty much easy to answer the question. What is the correct option? A, B, C, D. Come on, guys, I'm waiting for your answer. See, it's pretty much easy. Just apply the provision over here. Even you can select from the options. What is the correct provision? 180 days, 90 days, 365 days, or should not be considered as an NPA. It's a provision-based question, and that is directly linked with the provision, and it is one of the practical case also. Come on, guys. Pretty much easy. I'm waiting for your answer in this. Which is the correct option? See, the more you will participate, the more you will try to answer, the more you will learn. It's very important. That's why we have kept this session for you as per our request that, the more you will practice, the more you will understand. Okay. So I'll suggest please participate and, as much as you can, answer as much as you can, because it will enhance your understanding of the topic. Okay. See, as per the provision, okay, as per the provision says that accounts where regular or ad hoc limit are not reviewed within 180 days from the date of sanction or the due date, then they should be considered as an NPA. So the provision says that 180 days is the limit. Okay. So 180 days here, option A, where the within 180 days is a correct option. B, C is not a appropriate and correct option because 90 days or 365 days is not an appropriate limit as per the provision. Number 2, option D, account should not be considered as NPA is incorrect. Accounts are required to be considered as an NPA if the limit is not reviewed by the branch. Clear? Any doubt? Any doubt, guys? So A is the correct option. Yes, Vidula, absolutely correct. A is the correct option over here. Okay. Another question. Which one it was? 5. Okay. Question number 5. You were appointed as an branch auditor of X branch of ABC Bank. During your audit, you came across few accounts or a little bit few savings accounts. Savings accounts which were inactive or inoperative since last 2 years. Okay, which were inoperative or inactive since last 2 years. Now, as the balance in those accounts was not that much material, as the balance in those accounts are not that much material, you as an auditor, branch auditor, decided not to review the said accounts even on test check basis. In your audit. Okay, you decided not to check those accounts on test basis in your audit. Now, as a signing partner or as a signing partner of your firm, Mr. A has an opinion that this audit procedure is not appropriate. You need to think whether Mr. A is correct or not. So your audit procedure is leaving the accounts which are inoperative since last 2 years. Even you are not verifying those accounts on a tax check basis. Okay, as these accounts are not material, so you are leaving out the immaterial accounts. You are saying that these accounts are not material and hence I am not checking those accounts. So as an auditor, like what should be your approach? Whether Mr. A is correct, Mr. A is saying that your audit procedure is not appropriate. Okay. Come on, guys. It's pretty simple, common topic. Come on, I'm waiting for your answer. It's pretty simple. Again, based on the, this is not the provision, but this is common logic of particular topic. If you are read, you will be able to answer, I'm sure. That's why I am discussing certain topics which are provision based and which requires specific application of provision, so that it can enhance your understanding and clarity about the topic. Come on, guys. Pretty much easy, nothing difficult if you know the provision. Okay. Let me do one thing in this case. Okay. I'll discuss the provision also. I'll provide you the options also. Then you select from the option which is the appropriate one. Okay. So these are the options. Inoperative accounts, both savings and current, are high risk area of fraud in banks. As per the RBI guidelines, a saving or current account should be treated as inoperative or dormant if there are no transactions in the account for over a period of 2 years. We need to verify on a sample basis some of the inoperative accounts. Second, inoperative accounts, both savings and currents, are not high risk areas of fraud in bank. Savings and current accounts should be treated as inoperative or dormant if no transaction in the account over a period of 3 years. Hence, these accounts are not inoperative. Inoperative accounts, only current accounts are high risk area of fraud. Only current, not savings. Savings account should be treated as operative even if there are no transactions in the account for over a period of 3 years. Hence, these accounts are not inoperative. So, again, out of these options, what do you think the correct one is? Come on, guys. Which option you think is the correct option over here? Whether this account is operative, inoperative, whether a test check is required, not required, what is the correct option, guys? So, as per the RBI guidelines, if the account is inoperative or no transaction has been there in the account for over a period of 2 years, then that account should be considered as an inoperative account. So A is correct, and we need to verify on sample basis of some of the inoperative accounts whether they are actually inoperative, there is no transaction, or whether any amount is lying, whether that is material, whether there has been withdrawal. So on some sample basis, a test check is required for the inoperative account. Second one, the 3 years is not the correct one because it's a 2-year limit. Third one, only current account are high risk. It's not the case. Both current and saving account are high risk. So C is also not the correct option. The correct option is A. Guys, ask as many questions as you can. Reason because these type of questions can be asked in your exam, and it is imperative that you should have understanding of these topics. Okay, that's why this session was conducted, just to discuss some additional questions of the topics that you demanded that you need more practice onto. I'll suggest, guys, please practice as much as you can. Please provide the feedback also, because that is very important and necessary for us. Okay. On your feedback, we conducted this session. We discussed the questions, but I'll suggest you guys read as much as you can. Study material is sufficient for you. Read thoroughly that study material provided by ICI. Ask as many questions as you can. Okay, take the benefit of these lectures, because these lectures will, by asking the question in these lectures, you can enhance your clarity about the topic. So today we discussed in, let's say, in bank audit, multiple type of provisions. We discussed about the central government guarantee. We discussed about the limits which were not sanctioned or which were not verified from the date of sanction. We discussed about the inactive and inoperative provisions of an account. So we verified multiple areas of bank audit today. Okay. Basis on this, ask the question so that we can provide you the answer if there is a issue with any of the provision, whether you need further practice onto these areas, whether you require any further additional understanding of any particular topic. Your feedback is very important for us, so provide the feedback. Take the benefit of the opportunity that is provided by the institute. Okay, and that will really help you in your exam. That will immensely and to a greater extent will help you in your exam. Okay, so please provide your feedback. That is very important for us. So that's it for today. We discussed a lot of questions today. Thank you for participating, guys. I will be seeing you in the next lecture with the next topic that is there on the schedule. But please read the topic in advance so that we can, you can at least ask your questions, or we can, do a good discussion in the lecture. So see you in the next lecture, guys. Thank you for participating in the lecture.